Today we are talking about the big, beautiful bill. What was passed by the Senate on July 3rd, which President Trump, on the 249th anniversary of America on July 4th, signed into office the big, beautiful bill. So it is official. So today I'm going to go over the top 15 of some of the biggest changes that are going to impact you or people that you know. These are crucial, probably one of the biggest pieces of changes that has ever happened in the past 10 plus years, quite frankly, since 2017, and President Trump changed the tax laws. Now, a lot of those were supposed to be temporary up until the end of 2025. Hello, that's where we are. So they were looked to sunset. So the first one we're going over today is going over the tax brackets. Those tax brackets from 10, 12, 22, 24, 32, 35, and 37% were supposed to revert back, but now they're staying the same. For example, the 12 was supposed to go to 20, or the 12 was supposed to go to 15%. That 12 to 15 doesn't seem like a lot, but that's a 3% increase on 12. That's a 25% increase in just that bracket. The 22% bracket was supposed to go back to 25. The 24 to 28, 32 to 33, and the 37% was supposed to go back to 39.6. Well, now it's here to stay. That is massive, and it's a permanent change. They're saying that's going to reduce the revenue for our government by $2.1 trillion over the next 10 years. That's a lot. Now, the idea is that's $2.1 trillion in your pocket. That's the logic. Maybe you spend it and increase the economy. So that's the idea with it. Now, we're not going to go into politics and what makes sense or not. Another subcategory for that first change is AMT limitations are now permanently $500,000 for single and $1 million for married filing joint. Now, that is crucial because AMT limits that, yet again, we're supposed to go back. Let's continue the conversation. One of the biggest topics that were out there was the SALT deduction, the limitation of $10,000. Now it's going to $40,000. Now that's good until 2029. So yes, it's temporary, but still that is huge, where a lot of people in states like California, like New York, like New Jersey, like Pennsylvania, where these are high tax states with high property tax states, where now they're going to be able to keep and get that $40,000 right off. Now that's massive. That's a big deal for those who are taking itemized deductions, because there will be more itemized deductions, because that extra $30,000, depending on your tax bracket, could be saving people probably $10,000, $20,000. So it's huge. Number 3. So number 2 was the SALT deduction. Number 3 is the standard deduction is permanently staying at $15,000 single, $30,000 married. That is big because it was going to revert back, where it was going to be roughly half of that. Now, there is a side asterisk that I'm going to give, and that is the exemptions that were supposed to come back in 2026 are gone, and these are permanent changes. So standard deduction increase is there to stay. Number 4, now this is big for a lot of these wealthy people out there, and that is estate taxes. Estate taxes are now staying and going to be permanently changed for $15 million if you're single, $30 million if you're a married filing joint. That $30 million, anything over that is subject to estate taxes. Big. Number 5, solar credits. Now, you have until next year, end of 2026, where you can get that 30% off or 30% on solar, or on EV credits where you're getting that $7,500 federal deduction. So yes, for cars, EV, electric vehicle cars, and solar, you could still get the credits until next year with the same income limitations on the EVs, and anybody can get for the solar credits. Continuing the conversation, this is a big one, a brand new one. This has nothing to do with an itemized deduction. Some people forget that, but the car loan, the interest on car loans up to $10,000 a year. These are on qualified cars through 2028, so until 2029, just like the SALT limitation. And this is for newly purchased cars in 2025 for American-made vehicles. So this isn't for something you bought in 24. This is for 2025 and onward. You get to write off up to $10,000 a year on the interest on the car. So interest that you paid. There are income limitations, $100,000 single, $200,000 married filing joint. New child tax credit, well, it's not really new, it's here to stay. So the $2,000, now $2,200, they even gave it a 10% increase. That is to motivate you to have more kids because of the reduced birth population. So that is here to stay. Super cool. Number 8, you have Now, taking a look at what was $2,000 and $1,000, but now $2,200 per child, as we discussed, this has a $200,000 to $400,000 if you're married filing joint income limitation. Senior tax deduction, okay? So this used to be $2,000, an extra $2,000 single, $3,200 married, is now $6,000 each per person. So that's $12,000 versus the $3,200 before. That is huge, with still income limitations of $75,000 single, $150,000 married filing joint. So this is an additional standard deduction for people over the age of 65. No tax on overtime. We heard that all the time. That was the biggest rave. Now, you got to understand how this works. Number one, you still have to pay taxes on payroll taxes. That's Social Security, Medicare. So it is still subject to it. Also, you're taking a deduction, okay, against overtime wages. So no tax on that portion up to certain limits. For example, if you're single, it's $12,500 or $25,000 if you're married. And there are still income limitations. For example, if you're single, $150,000 or married, $300,000. But the point is, no tax. You get an offset, a deduction, which makes it tax-free for overtime. That's a big deal. Same logic, might I add, on tips, except it's $25,000 is the allowance, and that's $150,000, same income, to $300,000 if you're married filing jointly. And keep in mind, this is for normal businesses that do it. For example, my business, no, it doesn't work for tips, right? Occupations that are normal, no specialized service trade, such as financial advisors, lawyers, accountants, doctors, dentists, and so on. But for hospitality, dining, certain retail, yes, you do get tax-free on your tips. Yet again, up to $25,000. Number 12, the QBI deduction is here to stay, and it's at 20%, not 23%, what the House originally wanted. When they passed it, the Senate said 20% is what it is, but congratulations, it's here to stay for those business owners that are out there. There are still ways that you could take advantage of that. We see a lot of people that are missing that boat. Number 13, bonus depreciation, which was 40% here in 2025. It was scaling down. In 2024, it was 60%. In 2023, it was 80%, and so on and so forth. But now the 100% bonus depreciation is here to stay. That is a really, really big deal. That takes into account for when you bought this year. I think it's January 19th of 2025 and onward. Number 14, R&D permanently extends their 100% expense. That is a big deal for a lot of people that are reinvesting in their processes and enhancements to their organization. So that is great. The last one, number 15, is opportunity zone credit. This opportunity zone enhancement is big. It was set to expire in the next couple of years, but now it is extended. So this is really big for people that can defer capital gains that they have. They can defer it and arguably get tax-free capital gain exclusion. So this is something that, if you have any questions, I heavily recommend to reach out to a professional. That's what we're here for. We're here to let you know that these changes are beneficial for most of you that are out there. You could take advantage of so many great opportunities that will save you money, enhance your financial situation, and to make sure you are paying less in taxes. I hope this video was helpful. This is from the Big Beautiful Bill, some of the top 15 things that are out there that we wanted to bring out to you as soon as possible. Thank you for your trust, and reach out if you have any questions.